Michael Cuggino is here. He's president and portfolio manager of the Permanent Portfolio family of funds. Michael, gold, it was strong, and then it kind of took some gains a little bit. And what's driving this latest move higher?
Yeah, good afternoon, Kelly. Well, I think it's a number of factors. It's a little bit unusual in that you have a strong dollar and gold rising at the same time. Generally, you don't see that. But I think when you look at global conditions, when you look at stickier than expected inflation, higher than longer interest rates, a lot of uncertainty with respect to fiscal policy here and abroad, global geopolitical uncertainty, strong central bank buying all around the world, and some countries trying to get together to create an alternative global payment system besides the U.S. dollar. I think there's enough risk factors there to make gold not such a knee-jerk reaction to just interest rates per se, but a more comprehensive view for investors that have some in their portfolio.
And obviously, there's been a lot of central bank buying. That's a huge part of the story. Gold's up 41% over the past year. Silver's up 46%. And yet, and investors, longtime investors know, you go in something like Freeport-McMoRan, you're more likely to get a migraine than anything. So I'd love to hear the case for some of these miners now who, you think, why not just own the underlying?
In the short term, yeah. One quick comment on gold and silver. You had a period where there was a multi-year consolidation too. And so where really prices probably underperformed where they should have been due to other factors. And so there's been a little bit of a catch-up situation in gold and silver as well. But when you look at it longer term, there are reasonable reasons to expect over the long term that it's going to go higher. And investors should, decide if they want to have that in their portfolio. With respect to Freeport specifically, yes, we own it. It is a beaten down stock. It's a longer term. I think you have to be patient with it. But we believe that global growth will eventually grow. We do believe the demand for copper is going to be and probably is very strong.
Right.
Freeport's a very efficient producer. And they pay a very good dividend. They're great with shareholder returns. We expect revenues and profits to go up over the long term.
I'm just going to pick on them for one more second. Maybe the team in the back can show me like a 20-year price chart. But here's why. I remember writing about Freeport almost 20 years ago, Michael, and you can make all the same arguments for why you should hold them or why not. The shares then were around 50, and today they're around 37.
Yeah, and I think, this is a very commoditized name, obviously. So commodities are cyclical. They trade in a more cyclical nature than, say, up and to the right growth stock. And so I think what you tend to do is you want to get them when they're cheaper and then ride them and then decide how much of that you want in your portfolio. We have dedicated exposure to real estate and natural resources, but there's no question that the valuation is cyclical. The way they trade is cyclical. And so you have to, really it's an argument for diversification, why you combine some of those kinds of companies with other types of companies in a portfolio.
Right. And you've got NVIDIA and Broadcom, Digital Realty Trust. So it's not like this is an obsession taking away from the other parts of the market doing well. Michael, we'll check back in soon. Appreciate your time today.